Gold and silver have been the ultimate forms of money for thousands of years. Both are trusted across borders, immune to central bank policies, and valued when paper currencies fail. But if you had to choose only one, which is the better long-term store of value? Gold or silver? Let's take a closer look. Both metal once served as money. Gold was the standard of wealth, used by kings and treasuries. Silver was the people's money, used for trade and daily life. For centuries, the gold to silver ratio stayed around 10 to 1 or 16 to 1. But once the world moved to paper money in the 20th century, that link disappeared. Let's move to modern history. In 1971, when the US left the gold standard, gold cost $35 an ounce. Today, it's around $4,000. That's a 114-fold increase. Silver was $1.60 in 1971. Now it's about $50. That's a 31-fold increase. So nominally, gold has outperformed silver over the past 5 decades. But the real story begins when we adjust for inflation and volatility. The dollar has lost more than 85% of its purchasing power since the 1970s. After adjusting for inflation, gold has gained around 700% in real terms. Silver gained roughly 200%. Both metals protected wealth, but gold did it with more stability. Now let's talk about volatility. Silver is an industrial metal as well as a monetary one. That makes it more sensitive to the economy. In 1980, during the Hunt Brothers bubble, silver hit $50 an ounce. Then it crashed by 90%. Even today, silver can move 10% in a month. Gold rarely moves more than 2 or 3. Silver swings mean higher potential gains, but also deeper losses. Let's make this tangible. In 1970, a loaf of bread cost about 25 cents. An ounce of gold could buy 140 loaves. Today, with bread around $3 a loaf, that same ounce of gold buys roughly 1,300 loaves. Gold's purchasing power has increased almost tenfold against bread. Silver in 1970 bought 6 loaves. Today it buys around 16. Silver preserved value, but gold multiplied it. Silver does have one advantage: industrial demand. It's used in solar panels, electric vehicles, and electronics. That can create future scarcity, but it also ties silver's price to the global economy. When factories slow, silver usually falls. Gold behaves differently. It shines in uncertainty. Financial crises, wars, and inflation all tend to push gold higher. That's why central banks hold gold, not silver. Gold is also far more compact. 1 kilogram of gold is worth about $128,000. You'd need roughly 80 kilograms of silver to match it. Today, the gold to silver ratio is around 80 to 1. Historically, that's extremely high. Some investors see that as an opportunity for silver to catch up. But history shows that gold always reclaims dominance. So which is the better long-term store of value? Gold wins for consistency, stability, and global acceptance. Silver wins for accessibility and potential upside. Gold preserves. Silver speculates. Both outlast paper money and politics. But when it comes to wealth that endures across generations, one still shines above all: gold.